NYSE Floor Talk. Here at Exchange in Miami Beach is Noel Archard. He is the Global Head of ETFs and Portfolio Solutions at AllianceBernstein. Noel, it's always wonderful to see you. Thanks for joining me.
Thank you for having me. It's great to see you as well.
Thank you. So now, Noel, tell me, what investor outcome or problem do you want to talk about today?
I think what we're talking with clients about a whole lot is what's going to happen when money starts coming in off the sidelines. We obviously saw a really good year for ETFs last year, a great year for active ETFs. And that was in the face of record-breaking numbers in money market assets, where clients were going for sort of low risk and a higher return that we haven't seen, frankly, in quite some time. But as we're moving into 24, deeper into 24, and everyone's trying to figure out when the Fed might change the rate environment and when rates start to go lower, the importance of actually stretching out their duration is becoming a little bit more important. And thinking about how they might position their portfolios on the equity side, also equally important, because we saw a big equity run up, obviously, driven by a concentrated group of stocks in 23. So what is that going to look like for the rest of 24? So that's really a lot of the conversation, is how do we help clients leg into a little bit longer duration to take advantage of when rates do drop? And then how do we think about the market conditions for equity?
Okay, so tell me, what ETFs do you have that you'd like investors to consider?
For us, I mean, a lot of the conversations right now are about our ultra short income product year. That's obviously a very short duration, sub 1 year, but even that little incremental jump in duration can have a big impact when rates start to drop. You could also go out longer on the curve, obviously, and go for some of the long duration to take a different bet there. We also are talking to them a lot about our muni products, because the muni markets are in a really interesting situation where the upside potential is pretty great. Again, when a rate drop will most likely happen, the after-tax yield that you get by engaging in some of the markets now is pretty substantial. And we've got 3 products that follow the curve. Our oldest, we've been in market not quite 18 months now, but Taffy, which is our short duration tax-aware muni product, again, very well positioned if you want to leg into a little bit of duration and take advantage of some of that non-taxable exposure in the muni market. And then finally, we've got 2 equity products that we're getting a lot of questions about: low V and high div. Low volatility fund, because again, when the markets do go into flux, some people want a little bit of that, that ability to invest in companies that are going to weather that storm a bit better. High div, same sort of idea. For the first time in a long time, we're going to be able to balance income from fixed income products as well as income from equity, and high div is our equity arm of that to tie together with the fixed income component.
Okay, so now, Noel, tell me, where should investors go to learn more about these ETFs and your market views?
So our market, everything, if you go to abfunds.com, you'll see both our insights and investment options, and the invites is just packed with information about where we think the markets are heading in the coming year and years.
All right, well, Noel, always wonderful to talk with you. Thanks for joining me on Floor Talk today.
Thanks so much.